Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates and those 10-year note yields still holding on the recent highs. Recall we've rallied 10-year note yields about 20-some basis points going back the last 6 sessions. Last time we did that, it was early July. So we've actually made a pretty significant move here. We are still below the key resistance. That level is 2.25. We haven't gotten there yet. So market kind of waiting to see what's going to happen. We got a stronger CPI reading today after several weaker than expected readings. So this has kind of given the market a little bit of a nudge as far as yields go higher. So prices lower. And I think right now we're kind of waiting. Tomorrow we get the retail sales number, followed by the University of Michigan sentiment with its key inflation outlook of 1 in 5 years. So those are kind of the things that the market's waiting on right now. Market volatility is still kind of in the doldrums. It's not seeing a whole lot. We're holding below 4% in that December 10-year volatility, which is significant because it's year end and there's a lot going on between now and then. And if there was going to be any sort of anticipation of a market shift or whatever, that reading should be higher, significantly higher than it is now. And it's not. So the market's still kind of waiting. And that leads us to one last thing here. What's causing all this? Well, the Fed. And we have a Fed meeting next week where they're going to talk about potentially unwinding some of their balance sheet. They're going to give us more forward guidance. They're going to tell us possibly how the storms will affect second and third quarter numbers. And I think that right now the market's kind of in that wait and see mode. Fed fund futures were down as low as 20% odds of a rate hike by the end of the year. Now we're back up closer to 50. So we've seen a reversal not only in yields but in Fed tightening expectations. So they're going hand in hand. And right now the Fed will have a chance to clarify that next week. And I think the bond market, while it's waiting for some kind of insight on how they're going to unwind their balance sheet, is certainly anticipating that it will come as at least some announcement. So yields are higher, vols are lower. It's all about the Fed, I think, once we get past the data tomorrow. And that'll take us obviously into the middle of next week. So right now, a sort of, we'll call it a bearish Treasury outlook, but we got to wait and see what happens next week. This has been Todd Colvin coming to you from the floor of the CME Group.